So we're in chapter 2, but I wanted to spend today getting started on the first project. Now, this first project we won't actually finish until we talk about chapter 3, so after we test in chapter 2. But the reason we're starting it now is there's a lot of it you can go ahead and do, like all the journalizing and posting that we talked about last week. So I want you to go ahead and spend today like kind of getting acclimated to it while we have face-to-face time, and I can kind of help you. And then we'll probably, I think we have another day, I didn't bring my schedule, that we'll work on it in class like in chapter 3. Okay, so you won't have to finish it right now. It won't be due for a few weeks, probably like mid-October, before fall break. Not that we get fall break in this class, but it's always my timeline. But it'll really help you if you go ahead and start and finish as much as you can, because it'll help you on the chapter 2 test. Okay, so be working on chapter 2 homework, and then you also have this little project. So if you're on Canvas, and it's actually under, I'm going to minimize those, the project one's actually listed under Unit 3. So if you scroll down to Unit 3, you'll see Project 1, and yeah, I have right now it's due October 9th, so you have a few weeks.
You said under Unit 3?
Yeah, Unit 3, and you should see a Project 1 link for Cengage. And as you can see, it's worth 75 points, so it's a big point project. And then, well, after we cover Chapter 4, you'll notice we have Project 2. It's shorter, it's just kind of wrapping it all up, the whole accounting cycle. So once we've covered Chapter 4, we'll work on just finishing up the project. So, but all total, the project is worth 100 points. So it's 10% of your grade. And that's really more intended to help you than punish you, okay? So as long as you do it all, most of it's in Cengage, but we're going to keep a ledger in Excel to go with it, the ledger's in Excel. As long as you complete it all, you should get an A on it, because you can use check your work and all of that, and you can always have me look over it. So it should boost your grade and help you with Chapter 2 and beyond, really, okay? So this one, I'm going to go ahead and hit Start Assignment now. Once it loads, sometimes it's a little slower to load. Okay, so we have, it's one of the longer ones where it's more of a blank worksheet problem. So you'll see several tabs. So Instructions tab is really important. Once I'm finished talking, I'll let you guys print it off so you have it there. It's easier to have a printed copy than having to flip back and forth. As well as, I'll just show you real quickly, the chart of accounts. I'll have you guys print that as well, just because it's easier when you're typing in journal entries to have the accounts handy so you know exactly how they're worded. I know in my class the other day, I said salaries expense. I was helping them with the journal entry, and they're like, it's not taking it. Well, I didn't print my chart of accounts, and it's salary expense. So, you know, it could just be a typo, but it turns red on you. So it's nice to have that printed off. So I'm just going to read through the instructions really quickly, and then we'll talk about and kind of do a little bit of it together, like the first one, so you understand the process. So Kelly Pitney began her consulting business, Kelly Consulting, on April 1st of 2018. The accounting cycle for April, including the financial statements, was in the chapter, so it's in Chapter 3. During May, Kelly Consulting entered into the following transactions. So they give us a list of transactions from May 3rd through the 17th, and then they give us May 20th through the 31st. So you'll have a whole month of transactions that you're going to journalize and post, okay? So then it says required. It tells you, you know, your chart of accounts is in a separate panel, as well as they've provided the post-closing trial balance as of April 30th. Okay, that's going to be below in these same instructions. So the first thing we're going to do is we're going to look at the ledger and set up some balances, because she's already been in business for a month, so she already has some accounts with existing balances. So step one, we're going to get our ledger ready for entering in the remaining transactions. So we'll do that with that post-closing trial balance from April 30th. We will do that in an Excel spreadsheet that is given to you where the accounts are already set up. So you'll just have to enter in, you know, just like you were posting to a normal ledger. So we'll look at that in a minute. You will want to save that and keep it. And we'll talk about that in a little bit too, about like ways you could save it and keep it so you can work on it at home too. And you'll actually have that all the way through project 2. Okay, so you'll have to turn that in on Canvas just to show me that you did it. You'll get points for doing it. So we'll do that in a minute. So we're going to enter in balances from that post-closing trial balances down below here into our ledger. That's going to be step 1. And then still on step 1, part B, we're going to journalize the May transactions on page 5 of the journal. And that's going to be in Cengage. And then you'll be posting those to that Excel ledger. And then number 2, you're going to journalize all of the May transactions, and then we're going to post them. And then we're going to prepare an unadjusted trial balance. So those 3 steps are the steps that you can do now. Okay, you can do all the journal entries for May, you can post them all to the ledger, and you can do the trial balance. Okay, that's what we're going to be working on. So right now you can stop after step 3. Okay. The rest of it, if you read it, it might get confusing because it's talking about adjusting entries, which is chapter 3. So we're not doing steps 4 through 7 yet. But on these instructions, again, it gives me these balances. So these were the balances at the end of April 30th for the accounts listed here. These are going to be beginning May balances that we're going to start our ledger with. Okay, so that's the first thing we're going to do. And that's really where we're starting. Other things, so I'm going to click on the ledger tab. So go ahead and click on the ledger button or tab. And you'll notice there's a blue spreadsheet button link. Go ahead and click on that, the blue spreadsheet, and it's going to open up an Excel document. So I'm going to, once it downloads, I'm going to click on it. And when it opens up, the first thing you're going to want to do, move this out of my way, is up on the top, right under the green, it has a protected view. Make sure you click the Enable Editing button. Otherwise, you won't be able to type in the worksheet. So click Enable Editing. There we go. Okay. And then the other thing you're going to want to do is when you're on the spreadsheet, you want to click down here where it says Ledger. Okay. Because we're on this end of period worksheet, that means nothing to you right now. And it shouldn't, so don't freak out. So you want to click on Ledger, the Ledger tab. And when you do that, yours should look more like mine, or just like mine, really. If I scroll all the way to the top, I'll see cash. Okay, so the ledger, again, is a list of all the accounts in the chart of account order. Okay, so I have cash, account number 11. Once I've done my journal entries, this is where I'm going to post all the debits and credits to cash account. Okay, so if you were to scroll through this, you'd see the next one's accounts receivable, supplies, so on and so forth. You are going to see some accounts on here, they're on the chart of accounts, that we haven't used before, and we're not going to use right now. So that's okay. Okay, so if you see an account like income summary, for example, we haven't used that yet. We don't know what it is, and that's okay. Okay, so don't flip out if you don't use an account. We're going to use, our typical asset accounts. We're going to use liability accounts, revenues, expenses, okay, common stock, things like that, dividends. The ones you've heard of, yes. So again, don't worry if you don't have, things in every account when you're done with the first part of the project, because there is a project 2 and finishing up this project. Okay. So this is the ledger. So again, you can save this to these computers, but they erase. So what I want you to do before you leave is make sure, if you've worked in the ledger at all, that you've saved it. So with your Raider Rose account, you do have Google Drive. If you use that, you can save to Google Drive. You can always open up your email and send it as an attachment. So if you have a flash drive, you can save it to that. But I recommend, putting it in like Google Drive or emailing it to yourself. And I'll just make sure everyone does that before we leave so you have access to it. Because you definitely, if you've worked in it at all, you don't want to lose what you've done. Okay. So we're going to do that. Let's see. I'm going to click back in Cengage for a minute. So when I'm in this project, if I click on the Journal tab, make it bigger here. Get rid of that stuff. Okay. if I go into journal, I'm going to make mine a little smaller so you can see the whole thing real quick. This is where we're going to journalize every transaction that they give us in the instructions. Okay, so it starts on page 5 because she already has done a month's worth of transactions. And otherwise, it's just a typical journal. You'll be putting in the date, the accounts that are being affected, and the debit and credit amounts. Okay, and again, we're going to do one together. The big thing to remember in this and your homework on the test anywhere, you always list your debit account first. Okay, that's one of the biggest errors I see. You might have the right, entry for that business transaction, but if you flip it, if you list the credit first and then the debit, it will count off some points. And it'll turn, like, I think it shades it red so you know something's wrong. But just as, an overall reminder, always list your debits before your credits, okay? Always list both a debit and a credit, or more than one debit and credit. And make sure, that you're filling it out in order, okay, by transaction date.
Should it bring me to some page?
Yes, it sure should. So if you hit start assignment now, where we're at. Let me actually. Okay, so the ledger, you're going to start on page 5 and you're going to journalize. You're going to look at the instructions and journalize starting the May 3rd transaction. Once we've journalized the May 3rd transaction, here's my suggestion as far as journalizing and posting, and I have a reason for it. If I were you, I would journalize all of page 5 transactions before you post anything, okay? And the reason for that is kind of twofold, but first of all, on the instructions, you'll have May 3rd through the 17th. So is it 4, 5, 6, like 7 or 8 transactions. If you go ahead and journalize all of those first into your journal, page 5, then check my work will become active. Okay. So if you journalize by the page, so that's kind of how check my work works in the project. So you can check your work. Make sure before you start posting to the ledger that all your journal entries are correct. So to me, it's a wiser move to journalize that first page of transactions, hit check my work, fix any errors you have, and then post to your ledger. Because what happens is if you're posting as you journalize, well, if you make a mistake, you're going to have to go fix it in the ledger. It's just going to take time, right? You're going to end up taking time to go back and fix it, and there's a better chance that you're going to accidentally leave an error in the ledger. Seen it. So yeah, it's better. It'll save you time and hassle. So journalize the first page of the transactions, just May 3rd through the 17th. In this journal, you will not skip a line between transactions either, okay? Like in the real world, you would. So it's a little frustrating that we don't, but I'm trying to let it go. I'm not doing a very good job of it. I guess I want you guys to know the proper format, but it's fine. So you won't skip a line between transactions, and you'll just post, you'll enter in all of your journal entries. Do your check your work. Once it's all correct, then move on to posting to your ledger. Okay? The only thing you shouldn't have filled in on your journal yet will be the post reference. I don't want you to do that until you actually post to the journal, or the ledger, sorry. Okay? And that's so you know where you picked off, because you may left off. You may be working on it in here and then taking it home or doing it at another time. And if you put in those post references before you've actually posted to the ledger, you might miss something, okay? So post and do the post references as you go. Let's set up our spreadsheet a little bit. So I'm going to go back down here. I'm going to go back into my Excel spreadsheet, my ledger. So open up your ledger.
Are we able to check these ones on the?
Yeah, I'm going to have you print the instructions here in a minute. That way you have what you need to get started.
Right. Because I'm with you with everything.
Yeah, because like I printed, and I will let you know they do kind of print in small text, but it's better. You guys have younger eyes, so hopefully you can read it. If not, you can always do it on the computer, but you can copy and paste it too if you want to print it a little bit bigger. But I'm going off of the first thing, like I said, that I want you to do is you'll print the instructions. You'll have this post-closing trial balance. these are the balances I want to establish in my ledger. Okay, so for example, for cash, I want to put the cash balance was 22,100. So I'm just going to type. I'm going to put May 1st as the date, and you can literally just type 5-1, 5-1. And then our post reference, I'm just going to put an X because this is a balance. So it's just coming from here. And then over in the balance columns, in the debit balance, I'm going to put 22,100. And you don't have to type dollar signs or commas or anything because notice it formats it for you once you hit enter or tab. Okay, so 5-1, X for post reference, 22,100. And you're just going to do that for all of the accounts that are on this post-closing trial balance. So for example, I'd then scroll down to accounts receivable, 5-1, X for my post reference, and it has a balance of 3,400. 3,400. So once we've set up all of those account balances in our ledger, we are ready to start journalizing and posting. So again, I recommend doing all of page 5's journal entries and then posting, but we're going to do the first one together. So we're going to journalize and post just so you can see. So I'm going back into Cengage. And that first transaction says May 3rd, received cash from clients as an advance service or advance payment for services to be provided and reported it as unearned fees. So did we talk about unearned fees?
I don't think we
Yeah, I don't think we did. I'm like trying to remember. I teach 2 sections, so sometimes I forget what I've told who, right? And unearned fees is a liability account. So what unearned fees is kind of what it sounds like. It's like service that we owe someone. So they've paid us in advance. They've given us cash, and we owe them the service. So most liabilities so far, the only one we've dealt with is accounts payable when we owe money. Well, now we owe a service. So it's pretty common, if you've ever done, like had to have your roof replaced or any type of construction, sometimes they want money down or payment in advance. Or the example the book uses a lot is like ticket sales. If you're going to go to like an OU football game, do you normally buy tickets like at the door? No, because you probably won't get them, right? Just scalp them. Or like concert tickets or anything like that, right? You usually buy those weeks, months, maybe even a year in advance. So that's an unearned fee for the business that's selling it, like Ticketmaster. If they're selling you tickets to a concert, they're taking your money and then providing you that concert, the service, maybe 3 months later, okay? So for them, it's an unearned fee or an unearned revenue.
So bottom line, you have a vacation coming up.
Yes. Yeah, exactly. Yeah, because you have to buy it in advance. So you may charge it on your credit card or even hotels or anything. So it's really pretty common, right? Especially in service industry. So you have to pay up front. So that's all it is. It's from the, we're the company and we're receiving your cash. So we're going to go ahead and log it as cash, and we're going to credit the liability account unearned fees. Okay. So it's just a way of holding it and saying, okay, we owe you this service at a later date. So it's a typical liability account. It increases on the credit side, just like accounts payable. Okay. So when I'm on my journal, I'm going to click on my journal tab. Make this bigger. And it's like tiny. On your date, you could do 5-3. Notice it doesn't really matter. It reformats the date for you. So it types it into May 3rd. But I don't like to type out the date. So. And then on the description line, you're going to type your debit account, which in this case is cash. Cash. And you can hit tab to kind of move through. I'm not doing my post reference just yet. So I'm going to tab to debit. And the debit amount was $4,500. $4,500.
Yes, I'm happy.
Yeah, there you are. So just scroll down a little bit in that window. Yeah, and make sure you're in the first line. And click that little box right there. It'll make it easier to, and then click on instructions so it goes away.
Okay.
There you go.
That's why it wasn't, so I was still putting instructions.
Yeah, those windows kind of pile on top of one another sometimes. So there we have May 3rd cash and then the 4,500 debit. On line 2, I don't have to put the date. Okay, we're on the same. On line 2, you don't have to put the date again because we're on the same transaction. On line 2, I'm going to type my credit account, which is unearned fees. If you happen to type it wrong, it will turn red. So it will kind of prompt you to correct your spelling errors as you go, which is kind of nice. If you type in the wrong account, but it's a real, like if I put cash here, it wouldn't flag it red until I check my work. But if you have like a spelling error, it goes ahead and flags it as wrong. So I know I need to type it correctly. Okay, so unearned fees on line 2, and I tab over to my credit and put my 4,500. Okay, so that's my first journal entry. And notice when I did that, and went ahead and put in the indent, you know, showing that that's a credit account. So it indents whenever you do a credit. So again, it's really important to always list your debit first on the first line and then your credit. And then they should equal, debits equal credits. And you don't have to look at this at all, but like out here to the right, it shows you how your accounting equation is being affected by that transaction.
That's kind of cool.
It's kind of nice, yeah. I kind of like that because it just reiterates your increases or decreases. So you can be like, yes, cash was increasing. Yes, our liability was increasing. So it's kind of a nice visual. Okay.
So same day, 2 transactions.
Well, this is just one transaction. Yeah, this is just one transaction. We just have the debit and the credit side of it. Okay. Now, once, again, you would want to journalize the rest, but I'm going to show you what it looked like to post to your ledger. So I increased or debited cash 4,500. So I'm going to click back to my Excel ledger. And as you can see, it'd be easier to journalize and then post because you can print after you've done your journal entries. You could always print that journal page and then type them into your ledger so you're not flipping back and forth. Okay. I'm going to scroll all the way to the top where I see cash. I'm on just my cash account. Well, this new transaction took place on May 3rd. I'm just going to put a 3 for May 3rd because we've already put the month in. We're going to save some time. Our post reference in our ledger is always the journal page that that transaction occurred on. Well, we started on journal page 5. So everything on journal page 5 will have a post reference of just 5. And then we debited cash 4,500. Okay, so we debited cash 4,500. Well, now I just need to update my balance. My balance should be a running account balance. So what do I need to do to get my new cash balance? Add them together. Very good. We have a debit balance plus a debit, so we're going to add them together. If you're familiar with Excel and you want to put formulas in here to do it for you, feel free to. I like formulas, but I know not everyone's comfortable in Excel. So if you're not comfortable in Excel, you can truly, you know, put it on your calculator and just type the answers in. But if you know like simple functions or formulas, feel free to use them. I do, because Excel's one big giant calculator if you know how to use it, but you have to kind of know. So this one's 22,100 plus 4,500. Yeah, 26,600 is my new debit balance. Okay. So I just want to keep, after every transaction, I want to keep my running balance. Just like you would see in your checking account, right? You would see increases and decreases in the running balance. If the next transaction, and I think it is, we're not going to do it together, but no, it's actually an increase too. But if the next transaction's a credit, you would want to subtract, okay? But it's going to stay a debit balance if it's a positive amount, okay? So just remember that as you're going through cash. You may credit cash, but your balance should still be a debit balance, unless it goes negative, right? If we credited cash 27,000, then we would end up with a credit cash balance. But we won't have that in here, okay? So you should always have a debit cash balance or a positive amount. So remember that when you're doing your ledger, that your balance should be the normal increasing aside, okay? So all of your assets should have a running debit balance. all your liabilities, credits, common stock credit, you know, so on and so forth. This is account number 11. So I want to put that in as my post reference on my journal. So if I click back into Cengage, our post reference on our journal is the account number. So for cash, I'm going to put in a post reference of 11. Okay. And then I just need to post the 4,500 credit to unearned fees. So I'd flip back to my ledger. You scroll down past your assets, and you should see like accounts payable, salaries payable, then unearned fees. Unearned fees. Well, again, the date is the 3rd. Post reference is still journal page 5. And here we had a credit of 4,500. Well, you should have an existing credit balance of 2,500, so we just add. So that'd be 7,000. 7,000 balance. Okay. And then the last step, unearned fees has an account number 23. So I go back into Cengage and put a 23 in my post reference for unearned fees. And then you can start, and that's what I want you to pick up right now, is just, you know, go to May 5th. So on line 3, you would type in 5 for the date. We're still in May. So the only time I would type the month again is if we were now in June, or if it's on a new journal page. Okay, so I can just put the day, and then I would do my next journal entry. And the only one I want to give you an answer to one because we haven't covered it yet. So you get a freebie. So as you're journalizing, you don't want to put it in yet, but when you're journalizing transaction May 16th, the paid part-time receptionist, it says paid part-time receptionist for 2 weeks salary, including the amount owed on April 30th. Well, if you look at our ledger, we have an existing salaries payable credit of 120. That one we haven't covered yet. We'll cover, it's the only one that we haven't covered yet, so I'm going to give it to you. What it's really saying is this person that we're paying has already earned some salary, and we've logged 120 as an expense. And now we're paying her $750. So out of $750, we've already logged 120 of it, but we're paying her now. And again, we'll get into that in chapter 3. So I'm just going to give you the journal entry. So on the 16th, so write this down in your notes. On May 16th transaction, you should actually debit salary expense and you'll debit salaries payable. I believe is the right one. Yeah. And you're going to credit cash. Salaries expense will be 630. Salaries payable 120. Cash credit of 750. So that'll be your journal entry for May 16th. Okay. You will debit salary expense 120. You will debit salaries payable, or I'm sorry, salaries expense 630. I just said it wrong. So debit salaries expense 630. Debit salaries payable 120. And credit cash 750. That's one of those compound entries. And again, we just haven't quite gotten to that understanding yet. Okay, so that's a freebie. Okay, so go ahead today and just start journalizing, and you guys can work with each other on this. If you have questions, you can ask each other, you can ask me. I just want you to understand and learn. So as long as you're not just straight up copying, you know, I encourage you guys to ask each other questions, even on the homework and everything, you know, ask each other, figure it out together. Any questions?
I have tons, but I don't even know what to ask.
Okay, I'll take that.
I'm just gonna start working.